हेलो फ्रेंड्स, नमस्कार दोस्तों। वेरी वार्म वेलकम टू कमोडिटी मार्केट एनालिसिस विद एसडी। मैं हूं एसडी शानंद दास, मल्टी एसेट ट्रेडिंग एंड इन्वेस्टमेंट स्पेशलिस्ट। In this video, I'm going to take a look at the commodity market. And in the commodity market, I'm going to take a look at via my fountain of gold setup because I use this setup for my own trading. But please note, this video is not an encouragement to take position listening to me. This is more of an educational video जो मैं बना रहा हूं मेरे रेनबो स्टूडेंट्स एंड लर्नर्स के लिए who use this fountain of gold setup. Now, in the commodity space, first we take a look at through S&P GSCI, that is the global commodity. In addition to that, we do several other things. For example, we go to trading economics. And in the trading economics, we take a quick look at whatever the news is there. We saw the dollar bounce back. Palm oil falls over 1%. Hong Kong shares fall from 20-month high. These are just basically not significant news. These are market-based commentary. Now, in addition to that, we want to look at the calendar and especially the two-star events. Now, today is Thursday. So the final PMI, services PMI, this will add some volatility to the European currency market. This will be more important to see how the service sector in the United States is doing. If this PMI comes on the worst side, we can expect bigger jump into PMI reports. Sorry, into US dollar. US dollar price is likely to go up if the PMI comes on the stronger side. However, the main data of the week is on Friday, 6 o'clock, when I'll have my live session to explain the students' intermarket relationship between asset class. And we will also take a look at the US unemployment report or the non-farm payroll data. This is one of the most important data. So any commodities you are placing bets before the data and during the data, you should apply extreme caution. So commodity market will charge up more after the release of that data. Now what we will do, we will go to first the currency market and take a quick look at the dollar index. And now we will go to here, hide this original chart, go to indicators, apply SD Rainbow Wave version 1. First apply the currency, as we'll be doing the currency. And once it is done, we will also need SD RSI X, which we have already applied. This will create the 12-factor fountain of gold setup. Dollar, sorry, this is GSCI. I'll have to click on the dollar. We can see significant comeback on the US dollar, especially riding on the higher level of interest rates. So dollar, we in my Forex previous video, we discussed about dollar. There is some error happening possibly with TradingView. I'm in touch with them. These tables are tending to disappear, which I've checked through my script. Usually it has not been the case. Last time also it was a TradingView issue with their table generation function. Similar thing could be happening here as well. I'll definitely look through my data, my analytics to see if anything goes wrong. But somehow, sometimes data is just blinking the table. The data is not changing. It's basically the table is blinking and sometimes it's not blinking. We'll have to check this one. So overall, the dollar index, overall the dollar index I can see is rising on the higher level of side. Strength table is also dollar, we can see on the rising mode while other currencies are falling. As RBI has kept tight lead on USD INR, as US dollar is rising, Indian rupee is on the rise too. Gold is on the rise while silver is falling. With this, now what we'll do, we'll go back to the commodity, we'll change the setup to commodity, and we'll take a quick look now through the commodity indices. First, we'll take a look at through S&P GSCI. This is S&P GSCI, or representative of 24 global commodities, and commodities have turned bullish since mid 19th of September, and they are moving higher. I remain overall bullish on commodities. Now, within the commodities, not necessarily every commodity will be firing. If we look at USCI, that is firing better, that is representative of commodities which are forward curve wise bullish. Those are represented by USCI. So commodities are bullish. Now we take a look at DBB, that is the representative of base metals. So base metals from the RSI structure, you can clearly see that it is significantly moving higher, broken above this level. Now we'll take a look at DBA, that is the representative of agriculture. Not done well since our exit last time we discussed. It has further declined, and now a full red candle, which is anyway a full exit in the setup. But exit has come. I exit with background yellow full. So it is now a full exit from the agricultural side. Now, once this is done, we'll take a look at through LME base metals. That is, first we'll take a look at steel. You can have a look. Steel rebar, not in a bullish position much, in a range. This is tin future, which seems bullish, just like other base metals. Nickel largely we do not trade, but nickel is very, very bullish. I expect further rise in nickel. Price could reach close to 20,000, is currently at 17,940. So another 2,000 points rise is very much possible in nickel. Then we have lead. In London Metal Exchange, after the correction, lead is turning bullish. Lead is showing some strength. We'll have to see in India if some opportunities of entries are coming. But overall, London Metal Exchange, it's positive. Then we are taking a look at the aluminium, which is bullish, which has turned significantly bullish. It has moved higher. LME data has been supporting. It is heading towards this level of 2,712. It is getting close by to this level. We are looking at LME copper. LME is London Metal Exchange. Copper, after the correction, once again a comeback in copper in strength. Likely I remain bullish on copper, and the main resistance area is $10,200 around. In addition to that copper, I think one stock is looking good to me is Freeport-McMoRan. Freeport-McMoRan, after a very long time, though I'll have to change it, the stock is not fully ready as per my criteria, but it is getting ready. The RS status is still bearish, but overall it is ready. Once it closes above, I'm already bullish on this. So if it closes above, I'll be adding further quantity on Freeport-McMoRan. That is one of the biggest producer of copper and single biggest producer of molybdenum. Now we have moved to zinc. This is very strong counter. I see further rise in zinc. Weekly chart this is. If we look at the daily chart, lovely movement have been happening in zinc. Those who have been following, sorry, once again, I'll have to change the setup. So once it is, since it specially broke this flat line 2,950, it has been very, very bullish. And zinc, those who have been watching my video, you know I've been bullish on zinc. So it is looks on the rising mode. Now you might have seen a difference in the reading in the commodity under the table. if you see the table, the readings of the gold, silver are a bit different. This has nothing to do with data blinking or not. Gold, silver here, this one is a relative strength meter. And what you see in commodity is more of a strength meter, which is different. Now, majority of the commodities are on the rise. Silver is weak. Crude oil could be coming back. We'll have to closely watch now the individual commodities. We'll look at copper. Copper, I remain bullish. In fact, I remain further bullish. I'm ready to add quantity. I want to see strength further. Once this level is cleared up, we'll be adding more. Copper, I remain very much bullish until I see a red cap or short-term momentum turning bearish, or especially if this stop is getting hit, which is 11. Approximately, you can consider 20,000, 27,000 as the stop loss per contract, which may seem big, but obviously we look for bigger rides. I'm expecting copper to give, if things go the way we want to, this copper ride can reach up to this 939. So that's a very big ride compared to the risk that we are assuming. And to fine tune the entry, you can see this has been so far a beautiful structure. What you can do is use the 125 minutes chart to fine tuning the initial position. Once the trade moves good into profit, there you can add further quantity on it. Now you can focus more on the daily chart. So 125 minutes I very much use for fine tuning. Now aluminium has shown superb strength. What a strong comeback. A beautiful head and shoulder breakout we had above 241. It's a good 125 minutes head and shoulder, and aluminium is at a key resistance level. Once this cleared up, we can expect much bigger ride from aluminium. In addition to that, we'll go to LME, London Metal Exchange. And in London Metal Exchange, we are going to take a look at the aluminium. And I'm going to, those who know that what's going on here, you can see there is a change in the curve structure. For much longer period, we were in a curve structure of contango. Those who have done my class, you are aware of this. But aluminium is gradually now moving towards backwardation. If you bring on zinc, zinc is still on the contango. But this is very, very interesting that aluminium has moving towards backwardation. Copper is still in contango. Contangos tends to be bearish for the metals. So aluminium, this can crack away. I'm expecting now stronger ride from aluminium. Closely we'll be watching the fine-tuning time frame. If I see the break fail, we'll be quick to exit. The current stop should not be less than a two-part stop. We can put 239 to 240. Another, we can use the min stop 241. So aluminium looks very good to me. Zinc is also very good in India. 125 minutes, lovely breakout. Zinc we are aware of. This is lovely breakout is going on in zinc. Lead has been showing opportunities in London Metal Exchange, but MCX, we are not there yet. I don't have a full green candle. I have to wait for it for the full green candle. As you can see, sometimes this glitch is happening in TradingView. Last also, I think about a month back, I saw this glitch. I informed them. They took some actions and it gone away. Now it looks like it has returned. I'm in touch with them overall to see what's going on. So MCA, once this is done, base metal, I'll look at COMEX, I'll look at gold. Gold with our, I discussed that we need to exit after yesterday an initial early strength showing. I tried it with more in the Bs and GLD side. GLD means international ETF. Now that did not work out while I was in a class. The stop was hit and I had to exit. So gold is really not giving that much. Probably we need the non-farm and we need a strong breakout. Gold has been very one-sided trade, fully retail players, sentiment has gone into it. So gold is undergoing a correction, flat correction so far. So I'll stay out of the scope of gold. Will remain with SGBs. I'm not cutting SGBs. And this is basically the gold Bs. Futures definitely should exit with short-term momentum bearish, but gold Bs also. And let's see how it goes. We'll be able to buy at a higher price. Ultimately, we are not trading particular price level. We are trading as price changes, as it goes up. Now, silver is not doing well. Silver is significantly hinting that it can go for some bigger declines or longer consolidation at least, with the short-term momentum bearish and yesterday's bull move failing in silver. Once silver broke higher, this is where I also tried with this, but same with risk managed way SLV, because I was not sure, but this was a breakout, but white cross that you see was outside the candle body. And if this stays like yellow, it will be a full exit from silver derivative trades with the background turning yellow. But remember, only back turning yellow or any other alerts, they are valid if they stay till the closing time. Anyway, silver is either way looking weak, and we'll have to better stay away from silver. Now we are taking a look at US crude oil. Now, crude oil is very, very tight. We have events happening that has been influencing the crude oil. But overall, it's still, I think, continuing the range. We don't have a confirmed signal that crude oil is coming back in strength. It has shown comeback. It is definitely not going down, not planning to sell with Israel conflict, but I can't say that is broadly very bullish. So my strategy would be to wait further. This is another bad boy, natural gas. Hit my stop yesterday. You can see the spike. Whenever there is a risk, I don't shy away from cutting the risk. And this one I cut at 0.35%. So I'm getting better and better at booking my losses. However, this week I also suffered a relative big loss, which I usually do not take. That is a 5% loss I had to take on my initial position on the treasury. It was against my own setup, but I looking at the crisis, I thought long-term treasury would be good. Short terms, we don't. There's no risk, but long-term treasury there is price risk. So that's one of the listen say last 3, 4, 5 months that has been the biggest percentage of loss I have made. So this is NG1. This one also gave a loss yesterday, did not work out the breakout. Now I'll wait for a spike break to add further quantity on natural gas. Then this is natural because this is a very important resistance. So इसके साथ थोड़ा plotting चलेगा. That's why that is another reason I was able to cut the loss so quickly, because I was aware this is a key resistance level. I can't be hopeful. So once the level gets cleared up, by then only we'll be able to try out natural gas again on the long side. So overall, I remain bullish. I remain bullish in many ways via the UNG, via the BOIL, and M6 I'll be adding further above this level. So here all overall we have understood the commodities, and this is the current picture going on. I hope this discussion was helpful to all of you. अगर ऐसा हुआ, don't forget to like the video, put a thumbs up. All the best from my side, and as always, happy trading.